The IRS just took $16,000 from a $50,000 bonus. But here's what they don't tell you. 4 legal moves could have saved every penny. Most people have no clue these even exist. In this video, I'm revealing 4 things. Number 1, the exact strategies that can cut a person's tax bill by $23,000, how anyone can use these in under 30 minutes each, and why 95% of investors miss these and pay thousands more than they should. These are not sketchy loopholes. They're IRS-approved strategies written right into the tax code. The wealthy have used these for decades, and now you can too. Stick around. What you'll learn in the next several minutes could save you more money than any investment tip you'll ever hear. Hi, my name is Tommy Cloud. I'm president of Third Act Retirement Planning. It's a company that I started back in 2000, and we serve people that have suddenly received a large sum of money. We believe that sudden wealth tests emotions and relationships as much as it tests spreadsheets. So let's talk about strategy number 1. It's going to be tax loss harvest. First up, turn your biggest losers into tax wins. Here's the move. You have stocks that went up, great. You also have stocks that have tanked, which is even better for taxes. So in December, you sell your losers. Use these losses to cancel out your gains, dollar for dollar. So here's a real example. You have $10,000 in gains and $8,000 in losses. You sell the loser. Now you only pay tax on $2,000 of gain instead of the $10,000. And that can save you $24,000 in taxes depending on what your bracket is. This takes 15 minutes in your brokerage account, saves $3,000 to $8,000 every single year, depending on how much money you have in there. It could save you much more on certain years when there's big gains in the stock market. Because usually when there's big gains in the stock market, not every single stock is going to go up. You'll still have some losers in there. And so each year you can just sell off the losers to offset the gains, and then you can save losers to the next year if you don't have enough losers to offset the gains. So that's what can render your taxable account even tax-free, depending on how the stock market and the individual stocks that you own perform. And this is assuming, of course, you have individual stocks or enough ETFs to make this happen. Do you have a strategy number 2? Max out retirement accounts. Got a big bonus coming? Don't let the IRS feast on it. Here's your shield. For 2025, you can put $23,500 into your 401k. If you're over 50, add another $7,500. Every dollar you contribute disappears from your taxable income. $50,000 bonus in the 32% tax bracket, that's $16,000 in taxes. Max out your 401k with that money instead. You just save $7,520 in taxes while building your retirement. It's like getting paid to save for your future. Go ahead and talk to your HR. This takes 1 10-minute conversation. Also, if you're enjoying this video, subscribe because we'll be continuing to put out valuable content for you as a steward of the wealth that has been entrusted to you. Number 3, real estate depreciation. This one's my favorite. Making money while claiming losses on paper. Buy a rental property. IRS says the building loses value each year, even when it's actually going up in price. They let you deduct the imaginary loss from your real income. A $275,000 rental property gives you $10,000 in deductions every year for 27 and a half years. That's $3,200 back in your pocket annually if you're in the 32% bracket. But here's the kicker. Recent tax changes let you accelerate these deductions. With a cost segregation study, you might write off $50,000 or more in year 1. Find a good real estate agent. This conversation takes 30 minutes and can save you $15,000 yearly. Strategy number 4 I want to talk about is donate appreciated stock. This last one's brilliant. Do good while doing well on your taxes. Don't donate cash. Donate winning stocks instead. Here's why. You bought a stock for $10,000. It's now worth $50,000. If you sell it, you owe capital gains of $40,000 if it's in a taxable account. Instead, donate the stock directly to charity. 2 magic things happen. You deduct the full $50,000 in value and you pay $0 in capital gains tax. That's got to make you smile. You just turned a $40,000 tax profit into a $16,000 tax savings. Your broker can set up a donor-advised fund in 20 minutes. Use it whenever you want to give and save. Look, the tax code has 75,000 pages for a reason. It's full of opportunities if you know where to look. These 4 strategies have personally saved my clients thousands of dollars over the past year. They're 100% legal, IRS approved, and used by many wealthy people we serve and many wealthy people we don't serve all over the country. You have two choices: keep overpaying taxes or learn the rules of the game. Be the best steward that you can be, or be a better steward even. It's hard to be the best, it's subjective, but be a better steward by knowing the tax code a little bit better and some of the tax strategies that you can use. If you want more strategies, go ahead, like I mentioned earlier, hit the subscribe button and ring the bell notification. I drop new tax savings videos every so often, sprinkled in with the other topics that we cover. And if you want a free sudden wealth planning session or to discuss your particular tax session, just go ahead and click on the link and schedule a free, no cost, no obligation, no sales pitch, 20-minute meeting with me, and we can talk about your tax situation. Comment below with which strategy you're trying first. I personally read every comment, and I'll try to help you get started. Here's the truth. Every day you wait costs you money. I can promise you this: the wealthy do not wait. That is one of the 3 critical things I have learned from working with them for years. So you should take action now too.